Hi, my name is Suzanne, and over the last 10 years, I've been working with and continue to work with many educators who teach investing skills and strategies. And I've met all sorts of personalities in that time. And AJ, you've been on my show a few times, and we've had the chance to talk about some questions, and so it's great to have you back. Today, I hope to get a few nuggets of wisdom out from you, and we're going to ask you a juicy question. But before we get to that, I just want to say welcome, and also let our listeners know that you have some great initiatives going on at Trading Trainer. And before we get into the question, I just want to talk about one of my favorites, and that's your periodic webinar, where you give your community the opportunity to ask you anything over at askajonline.com. You want to tell us a little bit about that?
Yeah. Ask AJ Online is a little side project that we've been doing over here with respect to Trading Trainer. I'm actually pulling it up for you right now. And what I like to do, this is kind of like my service give back to the public. You can see this website. I went to askajonline.com, and what you can see here is once a month I go out to the public and I say, all I want for the cost of admission to come to this webinar is for you to ask your single most burning question about investing and trading. And so people come from all over the world, they ask their questions, and we go ahead and use some really amazing software to sort through the questions and also compare it to our previous calls to make sure we're not duplicating answers to the same questions. And we get on the call and we answer the hottest burning questions of the month, and it winds up creating some really amazing content. And we give people the replay, we give people the option to get the transcript, and it's just kind of this encyclopedia of answers that's been forming. So I really like this project, and as you can see on the screen, you just got to go to askajonline.com and you'll come to this screen right here where you just type in your question and it'll give you access to the webinar. So that's coming up, so everybody should do it.
Fantastic. Yeah, that's a great initiative, and I hope people go there to ask their burning questions. For today, it's my turn to ask you one burning question, and that is, what is the worst trade you've ever taken, and what did you learn from it?
Oh gosh, I've taken some real doozies, especially in the beginning of my trading career when I was just on the learning path. One of the ones I can remember taking that never worked out was a long leveraged position on Research in Motion. Now the company is called BlackBerry, and it's almost been demoted to a penny stock. But boy, were people bullish on Research in Motion. This was before I understood a lot of the intricacies of option trading, because with option trading, you can profit when the market goes up, when the market goes down, but also when the market goes sideways. You can profit on changes in the buying and selling pressures, which is really people's fear about what they think is coming next in the markets. And you can also profit on just time passing by. In fact, when you think about people who trade stocks and commodities, they can really only profit when either the stock or commodity is going up or down. They have two different options. If the stock or commodity goes sideways, then they're out of luck. So that's two strategies. With options and futures, for instance, there's about 27 different ways you can make money if you really delve down deeper. When I first started my investing journey, I did like a lot of folks do with options, and I just was taking stock moves and leveraging options. And so with Research in Motion, I leveraged a lot, and I really learned about what's called risk management. I learned a pretty large lesson regarding that when, and all successful traders know this, When you are planning out a trade or an investment, you need to plan it based on the risk or the perceived risk. Actually, not the perceived risk, the calculated risk of the position, the worst case scenario. A lot of folks, especially newbies into investing and into trading, always get big eyes looking at the potential rewards. Successful traders know that the rewards mean nothing until the position is closed, and at that time you count the rewards for accounting purposes and for possibly paying taxes on them. But when you're actually setting up the trade, you might as well ignore the rewards and just compare the risks and make sure the position sizing is right. So before any of that was even on my radar, I put this great position on, Research in Motion, a long leverage position. The high side potential was going to be amazing. So I was looking at that reward, and of course Research in Motion proceeded to drop and drop and drop, and my leverage long position, it went to nothing, and I lost much more than my portfolio would allow. And remember, if you have a portfolio and you lose, for instance, 10%, so your portfolio goes to 90% of what it was, now to grow it from where it is to where it was, it's not just growing it by 10%. You now have to grow it by something like 12 to 15% in order to get it back up to that original level. So losses are a lot more difficult to recuperate or to recuperate from. A lot of people forget that. They're like, oh, I just have to grow my portfolio by 10% again. No, 10% on a 90% portfolio is only going to get you back to about 99% of where you were, not 100% of where you were. You have to go to like 11 or 12% to even start accumulating gains. And by the time you put in commissions, it's like 15%. So make sure you're focusing on risk, because that was my biggest learning experience. And that Research in Motion trade, I can see in the back of my head. It's kind of been my Achilles heel for over a 24-year trading experience.
Wow. Well, thank you for sharing. I know it's not always easy to talk about, things that we've done wrong and mistakes we've made, but the key is learning from it, right? And you've given us something to think about. Just ignore the rewards when setting up a trade so that you really focus on risk management.
That's it. Always plan your trade based on risk, and then worry about the rewards, or don't even think about the rewards until the position's closed and you're sitting there at the table counting up your profits.
Great advice. Thank you, AJ. Thank you for being on again. It was wonderful to pick your brain and get this burning question of mine answered. So I want to again open it up to our listeners here. If there's anything you want to ask AJ, be sure to go over to askajonline.com and submit your question there. And the next time we talk to AJ, I'll be asking him, what's your preferred broker and trading platform? So stay tuned for that. We'll get that answered next time.
Yeah.
Thanks, AJ.
Thank you. Bye, everybody.